I'm Priscilla Barrera with the Investing News Network, and here with me today is Simon Morse, who's CEO of Benchmark Mineral Intelligence. Simon, thank you so much for joining me today.
Thank you very much, Priscilla, and it's good to see you again very soon.
Yes, that is true. And we're here today at the Battery Gigafactories Europe event in Budapest. So to start, I wanted to ask you and get your thoughts on the main trends that you've seen in the region when it comes to building a lithium-ion economy, as you call it.
Yeah, the main trends, for me, it's geopolitics, right? It's the Inflation Reduction Act in the US has kind of put the cat amongst the pigeons, if you like, very English phrase, over here in the European Union, especially. And politicians have been scrambling to react, basically. There was a fear that the money going from that was being handed out by the US government, and with investors following, the money that's happening in North America was drawing or potential to be quite destructive on what is being built over here in Europe, and that's mainly gigafactories that are being built. But of course, the start of a supply chain, mining. The start of mining, although it's going too slow, and refining. So the fear it could destroy that semi-momentum that Europe had. Well, for me, the big thing on this is a solution has been found as of 10 days ago when President Biden and Ursula von der Leyen, President of the EC, met. But this kind of trend, this geopolitical trend is kind of, it's blanketing this industry, which has really gone from, which was in ludicrous mode, but has now kind of turbocharged it into a rocket ship, really. So geopolitics, for me, is the ultimate trend at the moment here in Europe.
And when it comes to supply of critical raw materials, you've mentioned in your recent presentations that we need to scale up supply and shift from the 1,000 of tons to the million of tons globally. What does that mean for a region like Europe, where actual production of key raw materials such as lithium is so very limited?
Yeah, I think it's really important. Like, you've gone from Europe's really quite far behind and other regions in the world. Certainly, I mean, since the US has kind of got its act together in the last year and a half on the Inflation Reduction Act, which has kind of connected battery makers with chemical makers with mining. We're starting to see that connection hasn't really happened over in the European Union, and you kind of can probably for a number of reasons. But the key thing for me is Europe or the EU did lots of things really well from 2017 onwards. They founded the Battery Alliance, which really got together industry, finance, and politics. They got the discussion going early, which did result in gigafactories being planned and built, quite a few of them. Yet that supply chain coherence hasn't really followed. So I think to build mines here in Europe, to scale and get that supply, permitting has to be addressed as the number one thing. In fact, Ursula von der Leyen mentioned that, of getting mine permitting under 2 years. To be fair, if the European Union can do that, 2 years or under, and guarantee it, all but guarantee it, then you will see a critical minerals mining boom here. So that really is the one thing to watch.
Looking at the overall supply chain for critical minerals, what do you think Europe is getting right, and where could it learn lessons from Asia or even the US?
What is Europe getting right for critical minerals? When it discusses them a lot, it has prioritized them in terms of policy and the beginnings of legislation. I think, again, the European Union has a structural issue here, whether it's not like the US, which is a country. The European Union is a collection of countries with the same kind of interests or similar interests. Yet it's not a country structurally, or it's not a country at all. So I guess my point is that you can make a decision at European Union level, but then it goes down to individual countries to implement it, and they will have their own rules. They'll have their own momentum or decision making on the ground. So, and it's become in Europe, it's become quite competitive. If you look at Germany, who's been driving the interest in Germany, VW. If you look at France, what's been driving interest there, it's their automakers. So are they on the same page? Or are they competing for the same kind of market share and marketplace? That needs to be fixed. That needs to be actually what the US has done, which is spark the domestic industry as a whole to move as one and invest as one. And I think really that's where the European Union has its work cut out. But to be fair, the stuff we've heard over the last 2 months is really good stuff from the EU. It seems coherent. And if the European Union and the US can do a deal whereby Inflation Reduction Act benefits can be invested in Europe in return for a share of production or whatever of these minerals, whatever the deal is, then that will be the best thing possible, I think, for the European Union. Otherwise, the EU and the US will be more competitive than partners.
Yeah, right. And let's just touch on that. We've seen a lot of tension after the US launched the IRA, but it does seem like they're going to be working together with Europe when it comes to critical materials. Any other thoughts on that? And do you actually expect to see more collaboration between regions going forward?
Yeah, so collaboration with the European Union and the US, the Inflation Reduction Act, turbocharged USA. I do think the answer is yes, I expect to see that partnership. That's what's been announced, that something's in the pipeline. It's really interesting listening to the top of the European Union talk about batteries and critical minerals. It wasn't about clean tech. It wasn't about solar and all these other industries. It was about batteries and it was about critical raw materials, critical minerals. This is what the EU were worried about, that the US will basically lock up the whole market outside of China with what is an incredibly generous Inflation Reduction Act. As a result, I do think that, we're waiting on the language. What does it look like? I don't know, but it will be something like, if you're building a lithium mine in the European Union, you can accept the US will allow you to take their subsidies to build the mine, providing a refined product or something is guaranteed to be bought by US-based customers or US-based companies. It has to be for the benefit of the US industry as much as ensures that this money stays within the European Union. I don't know for sure what they'll end up with, but that's key. And then the second part of that question?
Yeah, do you expect to see more collaborations between regions, even outside of Europe and the US, with South America, with Africa, in Asia?
Yeah, and this is what we saw before the EU came out 10 days ago with this agreement. We saw the US creating the start of a trade bloc, which is what I thought was a trade bloc, which is very interesting. Key partners like Australia, Canada, Argentina, the UK was on the list, but the UK is not really doing anything, even though that's where I'm based and where I'm from. But it's on the list, why not? And a few other countries whereby they were doing critical raw material agreements. The EU wasn't on that list, so not then, it will be now. So I think that other countries outside of these regions will do deals, will band together. The question is how China reacts. Because it does feel, what's happening at the moment is the world is banding together to cut China out of the equation. But China is the leading company in this space. It knows how to mine, refine, make batteries, make electric vehicles. It pretty much dominates every section of the supply chain. And when it doesn't dominate on mining, Chinese companies have partnerships with mines outside of China. So we will see how China reacts. But at the moment, it's very much the USA and the EU versus China. And I don't think the top of the Chinese government will be too happy about that.
Obviously, government policy is one of the drivers in building this lithium-ion economy. And another one is the industry. And since we spoke last time, we've seen moves from car makers and battery makers trying to secure supply from junior miners, companies that are yet to be in production. Are these deals getting any better for the junior miners?
Yeah, junior miners, let's call it the junior miners, development stage miners, everything that's not in production. Yeah, I think the deals are getting bigger and better. quite frankly. I think certainly in the US, well, certainly in the US and Canada now, which is all Inflation Reduction Act money. You see the Lithium Americas deal with General Motors, $650 million. That's, for me, a new benchmark. It's a new high for these kind of deals. It's not just big money. It's an OEM investing directly into a miner. It's a new asset that isn't yet and wasn't yet funded, a new asset in Nevada, lithium asset that has to be brought on stream. So I think all other OEMs now will be looking at that deal and saying, how can we do something similar? I think it's probably shocked the market a bit with the fact that GM, an OEM, are now investing in mining. I think that's going to set a trend. Another thing I would mention is Albemarle is this 1.3 billion mega lithium refinery. They call it Mega Flex or something, but I call it a mega lithium refinery. Let's say it's this really expensive refinery, but not expensive in a lot of money is what I'm saying, a big chunk of investment. 1.3 billion is loads, right? Our industry is used to 50 million investment, 100 million. It wasn't used to the 650 coming from the Lithium Americas GM deal. It's definitely not, it's not used to at all billion-dollar deals effectively. And certainly incumbent lithium producers spending that amount of money. Both are Inflation Reduction Act backed, and that's the kind of deals that can happen because the industry needs to go it needs to think from the hundreds of millions into the billions, and ultimately, eventually, needs to think into the trillions, but we're not there yet. We're just starting at the 1 billion mark.
All right, and looking specifically at lithium, actually Albemarle made a takeover offer for Liontown Resources recently. Do you see this as the start of consolidation in the lithium space?
Yeah, I think you're going to see quite a bit of that going forward. I mean, lithium is going into a lower price environment, as we've seen the spot price in China come off quite a lot in the last 3 months. That began really back in November, but it's kind of gathered hold and gathered headlines in the last probably 3 weeks. It doesn't mean lithium is going to be a rock low price. It doesn't mean it's going to crash. It means it's just a lower price, a medium-term price environment, which is good for anyone that wants to buy lithium resources. Any M&A that might happen, it's good for the price of lithium-ion batteries, which have been hampered to rising because of the impact of certainly the prices of lithium. And what that means then is you're only going to have a low price environment for probably a 3-year period. Usually these kind of ebbs and flows of prices, they rise over a 2.5, 3 year period. They fall over a 2.5 year period. They start rising again because lithium isn't scaling quick enough for the demand. And so you've only got a window, I would say, of 2 to 3 years max to do as much M&A as you can. Because lithium, the cost of lithium extraction, the fact there isn't just physically enough supply in the pipeline, there's not enough lithium units in the pipeline for the medium term, let alone the long term, means it's a lithium land grab, and M&A has to happen as a result.
Then let's just stay on the topic of prices. As you mentioned, we've seen prices for lithium in China decline. What would you say to the investors listening to our conversation today about what this price decline is telling us about the current market? How much should they worry? Any thoughts?
Yeah, I mean, I don't think the investors should worry. Like, high prices aren't good for an industry, right? You're trying to build out a whole blueprint for this energy transition, for electric vehicles, to feed all these gigafactories. When the price is so high, and I think any lithium price above 40 is in kind of red alert zone because of the impact cost on lithium-ion batteries, and therefore the economics of an EV. Certainly, you've got to make more and more of them. You know, I think anything above $40 a kilogram is red alert zone. You can't be sitting there for the super long term on that. Certainly prices anywhere in the 60s and 70s and 80s, which it was, that isn't sustainable. That's why they're coming down. And so, for me, it's not okay. It's a natural part. It's natural flow of supply and demand dynamics in any industry. Lithium is a niche industry. It's scaling, but it's still in the hundreds of thousands of tons, not millions of tons, which means these price shocks happen, as I said before, every 2 or 3 years. I think that will be the case going forward, and I think it gives people, whether lower prices translates to cheaper stocks, I actually don't know, right? The physical market and the stock market are two very different things. But I think it does give the supply chain and OEMs a little bit of respite, a little bit of time to have a breather to work out what they really want to do.
All right. And in terms of financing, what do you think remains a barrier for the mining industry to attract more capital to build these mines that we need to supply the energy transition?
I still think it's permitting. It's a bit of a boring answer. It's a very mining-oriented answer, so it's probably great for your readers. But it's permitting, right? It's like you can't have, we have this classic phrase in Benchmark that we say it takes 10 years to build a gigafactory. 2 years to build a gigafactory and 10 years to build a mine. And actually, if it's probably longer than 10 years if you look at some of these critical mineral operations since they were found to if they actually get in production. But the point is, you can't have a 10-year, you can't even have a 5-year permitting cycle. The European Union wants to put that to 2 years and under. If they can do that, that will be a game changer for critical mineral mines in Europe. I think that's really is one to watch. But permitting. If you don't solve that, then you're not going to have your electric vehicles, and you're really not going to have your energy transition, because the energy transition is mining electric vehicles, and batteries are mining. I think politicians get that now, but the financing industry needs to step up and do that and back that as well.
And I've asked you this question in the past, but I think it's just interesting to see if things have changed. What do you think remains a misunderstanding for investors in the battery metal space?
Yeah, well, I think there are so many investors coming in, right? There's the investors that have been here a while now, 5, 6, 7 years. There's institutional money that never was in the space. It's kind of been around for about 5 years now, I'd say. Now I hear pension funds are coming in, which is nuts. If pension funds want to invest, it's here to stay, right? So that's an interesting kind of trend at the moment. It's the same misunderstanding as it was 5 years ago, and it will always be the same misunderstanding, which is that we're dealing with a commodity industry that's easily scalable, and therefore all the lithium in the world, all the nickel in the world, nickel sulfate in the world, all the graphite in the world, and anode, manganese sulfate, whatever people say will come on stream. There's a likelihood it won't. And if it does, it won't be on time. It'll probably be about 3 years late. And it's a commodity, it's not a specialty chemical. Well, all these inputs are specialty minerals or chemicals. So they're highly engineered. And, it's not just digging material out of the ground and shipping it. It's not an iron ore industry. This is a specialty chemical industry. I think that's the fundamental thing, because when banks do their supply-demand models, they add stuff up, and they don't really understand that midstream. If you understand the midstream, you realize where the bottlenecks are. There is a fundamental bottleneck on mining. That is the number one blocker, but getting that material through the supply chain, the midstream, you've got to get a grip of that, and you've got to understand really each plant, each chemical plant by each chemical plant. If you don't, then your numbers will be all over the place. And that is why Benchmark has a business, right, as well. So I'm not against that, but it will help if banks get a little bit better at that.
All right, and my last question for you today, as you think about the rest of 2023, what developments or catalysts are you looking forward to the most this year in the critical raw material space?
Geopolitics. I mean, this is the year of geopolitics, right? Like, last year was a mixed bag of everything coming out of COVID, demand for the roof, for lithium, especially prices going nuts, battery industry reaching 750 gigawatt hours. This year it will reach over a terawatt hour. That would normally be the headline. The lithium-ion battery industry going from 50 gigawatt hours in 2015 to 1,000 gigawatt hours in 2023. It's not the headline, because geopolitics has really is gripped. It is, as I mentioned, right now it's the US and the EU are positioning themselves against China. What's going to happen with that relationship? How will China react? We're going into a more unstable world. There's things with Russia's invasion of Ukraine, with the relationship with China there. We're in Hungary at the moment. Hungary is part of the European Union, but has a close relationship with China. It could really be an asset for whoever, really, certainly an asset for the industry, but is it a geopolitical asset? There's lots of things going on all the time, every day. But for me, the geopolitics has arrived in the lithium-ion battery industry, and that is the trend for 2023.
Thank you so much for joining me today.
Thank you very much, Priscilla.